What's good, family? Listen, today we're gonna talk about fair value gaps. Listen, this is something that I've recently been learning about is fair value gaps, and honestly, it has really started changing the game for me personally. It's helped me get way better entries as far as what you'll call sniper entries. It's helped me really, honestly, that's one of the main things. The second thing, it also helped me as far as identifying when the actual trend will change or if we'll get any type of continuation. I know most traders learn support and resistance, and honestly, that's not bad. But I've learned that the market mainly moves off of dang on fair value gaps and liquidity. So when you understand fair value gaps, then you are able to identify when the market will actually reverse, identify when is actually a good time to enter a trade to be able to get one of the best entries and being able to grab one of the best moves. Now, as you see, all of these boxes, this is all liquidity, well, fair value gaps. All of these are fair value gaps that you see boxed up, simply fair value gaps that I marked up. Now, what all a fair value gap is three candles. Hold on, I'm gonna get a clear chart. Let's just add some stuff. I want to get a, well, I'm going to get a clear chart. Oh wait, dang, I forgot that I'm on this. Hold on. All right, cool. Look, so a fair value gap is when you got three candles going in the same direction. You got a bearish candle right here. Then you got a second one and a third one. Now, what makes the fair value gap is when all of these levels are equal. Like right here, this got like it's a small gap, but they're fairly equal to be honest. So with that, the close of the actual candle on both candles are equal levels. Now right here, this is like overlapping it a little bit, so this wouldn't be a good fair value gap. So with that, let's find something better. Hmm. And sometimes I do zoom in because even though it could kind of look like it if you zoomed out, when you actually zoom in, you see that they touch and meet up with each other. That's a that's fairly decent. Mm, I'll find something a little bit better. Where's another clean FTG? I'm gonna zoom in. Since we're on a 4 hour, it's not many 4 hour fair value gaps that I'm really seeing. All right, something like this. So right here, you see that they apart, equal levels. Zoom in on it, they basically equal levels. Boom. Fair value gap. Same thing for the bottom, equal levels. So what we'll see, once you find the fair value gaps, you can go get the rectangle from your tools. Now you grab from the top of this candle to the bottom of this candle, and then you can just spread it out. Now with a fair value gap, the rule of thumb is 50% of this fair value gap has to get filled for this to actually be like, you could say, activated. For it to be like an actual thing that the market holds, it has to be 50% of the fair value gap. So if it don't reach 50%, then you could definitely look for the market to come back and go and tap that 50% to where now you can actually be looking for your trade, or if it continues to go further, then hey, you can start catching a buy, or however it's going at that time. So now we've marked up our fair value gap. You see right here, red candle, red candle, red candle. And then somebody, if you trade support and resistance, then you'll probably see a support zone right here. Boom, we got the breakout, then the retest. You think that we finna continue pushing, and then we get this fair value gap created, and then you're like, all right, well, we retested this again. But at this point, you will get liquidated, which this is actually a whole nother subject. But just off of this, you got support and resistance people. You're gonna buy off of here, grab, or at least buy off of this retest. Boom, grab that fair value gap was created, which is very clear if you understand how they work or if you know what you're looking at. And then we retested 50% of this fair value gap. And after that, we just start selling. So, boom, you got a buy structure right here. Boom, fair value gap was created, hit this 50%, and we sold out of it. Then we retested the fair value gap again, and we sold even deeper into the move. Now, obviously, this isn't like a very strong, crazy sell, but if you'd have caught this 50% fair value gap, this is on a 1 hour time frame. You could have caught this back to the bottom, made some money, even caught 50% of that move, and you would have been Gucci. Now, even if you would have still been holding and took another entry once we retested the fair value gap, you would have made even more money at the bottom. So as you could clearly see, price respects this fair value gap. Now, when you trade support and resistance, or at least me, when I used to trade support and resistance, I mainly look for it to hit a support zone or a resistance zone for it to actually turn around, which obviously, all right, you see this, but this isn't like once we hit this, it didn't just automatically turn around. But when we hit this 50% fair value gap, now it didn't automatically turn around, but it didn't really go much further either. So if you would have popped this, boom, you would have been able to catch this move and been able to make some money off of this FVG. Now the market do this multiple times, like right here. To a fairly smaller FVG, they actually overlap just a tad bit. But even if you look at this on a 1 hour, boom, another FVG. Now this didn't go as crazy, and these do overlap just well, they like right there by each other, like just barely at the equal levels. But boom. Now this would have been an instant reversal. But once we created this fair value gap, you could have seen what this done. It would have broke out. If you scalping, you would have been able to make a quick scalp, like something very quick. But then after that, once we broke past the fair value gap, the trend reversed. Like as you see, once we closed above it, the trend reversed. So the fair value gap will allow you to see two things. One, either we're gonna tap this 50% and we're gonna sell off, or if we buy, we're gonna buy off. Or if it closed, like if it closed past it, like here, if you would have been looking for a sell, you would have tapped this and then boom, it would have came back, closed above it, so you would have got stopped out. But if you would have waited on based on this structure down here, if you'd have waited to see what this fair value gap actually does, because you can see before we created the fair value gap, you already got a reversal trend right here, created this fair value gap, and then boom, it ended up breaking above. So at that point, you could have looked for the retest of the fair value gap, which we did get that. Boom, we was buying, we retested one time, start buying again, retest it a second time, and then you could have popped the entry at either one of these simply because you see that this market pushed above. So now that tells us that the buy is very solid to actually happen since we are above the fair value gap and we close. And then you just simply wait for the retest of the fair value gap. We popped it twice. After that, you would have been able to really either hold this trade, or if you're a scalper, you would have caught the move to up here or either to up here and you would have took your money. And if you would have still been holding off of this fair value gap break, it's just been good money. So with that, these are ways that you can identify the fair value gaps, and they everywhere. You simply just got to know what you're looking for. And again, fair value gap. This is another one. You got three candles in a row: green candle, green candle, green candle. The body of the actual candle, not the wick, this part of the candle either got a small gap or they meet at the same level, like they right by each other. So boom, another fair value gap. And this to show you that the market respects fair value gaps. Again, the market only moves off of fair value gaps and liquidity. So let's see. Boom. You mark up your fair value gap right here for the buy. If you was like looking for buys right here, and honestly, if you trade support and resistance, you probably would have been looking for a sell since we came off of the resistance right here, came back, well, sold from here, gave you a retest, boom, you would have been looking for a sell and you would have got stopped out. But right here, this made a fair value gap. Once it made the fair value gap, we came back, retested 50%, came back, retested it a couple, actually again, and then kind of consolidated inside of the fair value gap, and then boom, we end up taking off. And obviously, I didn't have my fair value gap marked up, so I didn't even take this trade. But I was looking for some type of sale right here, which I didn't have no fair value gap marked up, so I ain't even really tripping off of that. I didn't take it anyways. But as you see, the fair value gap is respected. So if you was looking for sales off of this break and retest, I mean, well, simply that would have been a major break. But you would have got stomped out if you would have looked for a sell anywhere right here off of resistance, off of this pushing down, this giving you a break. You would have just got stopped out. And then from this point, boom, came in here, shot up. You would have made some money. If you're a scalper, took this wick, or you could have held. If you're a swing trader, boom, and you would still been able to make some money. So this is fair value gaps and how you can actually use these to make you some money like this week. And not only will they give you the opportunity to make some money, but you can also grab way better entries. So if you don't know where you should be entering at, you can enter on the fair value gaps. You can either enter right when it tapped the 50%, or you can wait on the retest and boom, it hit the fair value gap again. Same thing right here. Fair value gap, retested it, boom, pushed off the fair value gap 50%, retested it again, and then took off. So however you want to do it, you could be able to take entries off of these fair value gaps. And if you look into hold, you can look for the next fair value gap that's above these levels or whatever levels you're looking at. And boom, mark those up and look at these as positions that the market has to go and hit, because the market only moves off of liquidity and fair value gaps. Simple. So you can be able to take these and find your next position for where you can hold the market to, or hold your trade to. As you see already, boom, we came back and we already touched this top fair value gap. And what we do, once we hit that 50%, we pushed a little bit past the fair value gap, and then we instantly just start reversing. And right now we're in a good sale based off of this top fair value gap. So if you had caught this trade from down here, popped it off the fair value gap, whether you took one entry, two, it don't really matter. You'd have caught this very explosive move to the top. You could have held this until you hit the next fair value gap, took your profits, and then you either could have went for a sale, or you just sit out and wait wait for it to retest this and then take a sale. So, hey, you see how the market is moving off these fair value gaps. Use these in your trading for this week. Mark up your fair value gaps and literally just see how it play out. Don't just take my word for it. Actually see what the market do based on the fair value gaps that you actually mark up yourself, and just see what happens. Now listen, if you would like to take trades with me and actually like pop trades with me every single week, I have a school community. You can join the community with the link in my bio. And if you're new to trading and you would like to learn more information like this that can and will help you make some money in the charts, listen, you can also click the link in my bio, get either or you could get both. Listen, I will see y'all next time on the next video with some more game.